All right, everyone, welcome back. Will Beach here. And on Saturday, I made you guys a video explaining that I still, based on my indicators, saw the market continuing on a downtrend. As we saw today on Monday, today is the 13th, it was a really red day. Now, I did say I think gold was going to hedge it a little bit, and gold got demolished. So I was wrong on that. But my indicators were telling me that this would progress down a little bit further. The markets are open right now. This is, it's 7:28 Eastern, so they're open and running right now. So you can see stuff is moving. So we can take a look right now and kind of see what we're looking at. If I were to guess today, today would be a cautionary day, right? So this would be if you're gonna trade, you have to be a little bit. If you're like a day trader, in and out, in and out. Um, Strictly because I believe today would be more of a consolidation day after a big red day like that. Why do I think that? So if I go into like the hourly chart, right, we're going to shrink this down. We have this super high ADX that is now topped out. So typically what will happen is once we peak at something like 60, that's like an extreme momentum, right? You can see that this started way back here and has done nothing but gone up. 60 is about the highest these ADXs go. And once it does that, it does consolidate still in a downward trend. So consolidate and downtrend. So what does that mean? It means it's going to continue downward most likely, but it's going to be at a slower pace. And you're going to see, maybe like a slightly little bit lower, but then a quick recovery. And then it's going to trickle down and maybe a little bit lower and then a quick recovery. So it's still going to be on this downward side of things, but you're going to see these bigger recoveries kind of holding price somewhere in this range where it would be considered consolidation. So even though we're coming down off of this, we are going to be very cautious with this one. You can see the opening of the day, the first 2 hours here has basically done nothing. And that actually started with the last couple hours of the day there was a new low, but you see how tight all of these are. This is a 30-minute chart on Euro USD, by the way. So when I follow the indices, I typically only follow NASDAQ, and that's just the main one because I like the tech stocks, etc. Obviously, they all are similar, not the exact same, but they're all very similar. So NASDAQ is typically what I pull up. So today in this video, though, I wanted to show you guys how I saw this whole thing unfolding. I didn't know that this would pull so far into a recession, but we have to understand the stages of movement. So you have trend, you have consolidation, you have correction, and you have reversals, right? The reversals obviously lead into the opposite side of the trend. So if we go into the NQ, which is the NASDAQ on these small scales, it's hard to see, right? If we go out into these big scales, and I'm going to go just way out here. I'll do like 10 years on the weekly just so you can see, right? We look at this and we go, man, this has done nothing but go up. I mean, look at the 2020 dip, right? It's this little blip right here into this full recovery. So how did we anticipate this was going to happen? And who knows, this might be a blip in the future, but how did we see this coming? All right. So how I just explained to you ADX being like 60s, like the absolute high. This is what we saw when we were watching this. 50 was way back here in 2021. From this point, it started coming down. This means you are losing momentum. But because it's in this hyper momentum state, as it's losing momentum, the price continues to rise. As the price continues to rise and it's losing momentum, we're going to enter consolidation. So in this first phase, we would have been looking for either this 50 to hold, which it didn't, and it went down. Then you're looking for like another support to hold, which would be this 180. And you kind of got this like mid-range kind of reversal, which would be a, because this is consolidation at this point, we hit this bottom. And that means this would have or should have double topped up here. And we would have seen some kind of range if it was true consolidation. Well, what ended up happening is it got rejected here. This rejection is a big sign of more to come. This 1.8 or 150 being the test, and now that has failed, right? So we would have liked to see it hold here if we were going to keep playing long. I call, if you guys watch any of my other videos, I call the 50 and the 1, this is a 50 SMA and this is a 150 EMA. So I call this the dead zone. It's a very tricky place to place trades because once you get into this area, you're kind of inclined to, is it going to go down to test or is it going to break through, right? And you're kind of watching this little bounce ping pong ball kind of go in between these, right? Now, what we're going to be looking for is, when do we see if this continues down versus corrects and goes back up, right? So what we're looking for is, how far down is this going to go down to pull these moving averages down through each other, right? So if you see, they're mixed up, right? You got the 20 below the 50, but the 50 still above the 150, and they're kind of mixed up. This is part of the reason why this is like a dead zone. Even though we have this trend or this correction right here, this isn't necessarily a full trend on the weekly scale because it's more or less a correction. Whereas obviously different scales mean different things. So if I were to go down into an hourly, this is a trend, right? Down is the trend because it's a much bigger move on a smaller scale. It's a smaller move on a larger scale. So that's why you have to be aware of where you're trading in relation to scale. Okay, this is where I'm going to go on a little tangent, but this is where people get messed up, especially in day trading, right? Because if you saw this might easily go, this is a 1 minute. Oh, I'm going long. Look at this. Look at this. It broke the pattern, right? You have like this little top and it broke it and then it started going up. That's long, right? But then it fades. And this is where you get beat up. Why? Because the overall trend in the hourlies and the 30 minutes and the dailies are down, right? So that's my little side tangent. You have to know what you're trading and where you're trading in. All right, so 4-hour charts, right? Look at this. We're peaking. We broke through 30 on the ADX, and we've extended into this more of a momentum state. What we haven't seen yet is any type of correction in this downward move. Therefore, we need to be aware of a correction. We have this 50 crossing the 150. So we know our trend is technically down now. But with this being so fully extended, we want to see a correction, then a continuation, right? So you can see now based on this that MACD, or they call it a 310 oscillator, but essentially it's a super MACD in my opinion. You got this moving average about to exit this, telling us that we're slowing down pace a little bit here. We're going to go into a consolidation phase. Again, you may still see some lower lows, but I don't see this just fully dropping again just yet. It's going to take a little while, a day probably, or 2 days. So we're going to watch for a correction. To me, this is not a safe place to make a long or a short because it's just been too much in the downward direction and we're getting too extended. So I wouldn't be comfortable. Your best positions are going to always be at moving average, the longest moving average indicator. So like for me, this 150, you see how price is literally moving at the 150, And then you see how this kind of dives down as our momentum picks up. So basically this break of this bottom trend here, right? That's what we're looking for, right? You could have done the same at top. You don't want to trade consolidation. You want to trade the move, not the consolidation, right? Consolidation is where traders go to die, right? They always get faked out. Oh, it's going long. Oh, nope, short. Oh, it's going short. Nope, long. So you have to actually wait for the breakout move and then confirm that with your signals. So if this breakout started to happen, but let's say my stochastic was up here above the 80, I would not be comfortable taking that trade, because above the 80 means we're in a long stochastic move. So I wouldn't be comfortable shorting that until I got short on the stochastic, which you can see we were already short on the stochastic. That's why we're in these red arrows and red arrows and red arrows, right? So you could kind of, even though this consolidation, you could see this kind of unfolding, is that even on its big bump here, it never was able to go back long and it stayed short. So it's easier to see on that. So when we go back into the daily and whatnot on that same move, you can see that here's a top, here's a double top, here's a triple top, and then momentum started dying off. As momentum was dying off, it starts pulling back up with long, right? So you're long, everything's still long. You see all these green arrows on the bottom, green momentum, green showing here, and we start curving back long, right? So you think you have this nice bounce off the 50 and we're going to continue long. And then it falls out right here. Then you get red arrows. You're in this, right? And then as days go by, you get this retest and it fails. So at this point right here, you have increasing momentum. You're still in this red down zone. You still are in this red zone. Your momentum is now down. You can now start to see that it does not want to hold this range and then it wants to continue lower. Now, in that first phase of this would be now a reversal, right? Because what it did was it consolidated from here to here, which was a warning sign. Anytime there's consolidation, that's a time for a reversal. It's time for a continuation or a reversal, but that's why you need to draw those lines and see which direction you're going to go and not just guess. So once you start consolidating, then you go into, where's this thing going to go? Here's where we started breaking out, right? Now we get this one big correction. So this was the start of the trend. This was a correction, and this was a continuation. All right, so we see that. So where many traders also get caught up is in the initial, it's as simple as this rejection into a continuation, because you can see this is what initiates it. But on a large scale, because you got to remember there's weekly time scales, there's monthly time scales, these are also corrections and not reversals, right? This could have led to a reversal had it held and continued back up. But because it didn't, it's a correction and then a continuation. And once we start breaking these bottoms again, you can see that our flow of ADX starts increasing again. And we're still down here in the red zone. We're still down here in the red zone, and we're still down here in the red zone. So as we start breaking out of these bottoms, you know that there's more red to come. So this is how I was able to track this and not get caught up in, oh, it's just long. I actually, if you guys notice, my following right now is not huge, right? I got 111 subscribers. Thank you guys for that. Please like and share and subscribe to allow me to keep making these videos. But I was able to tell my closest friends, hey, now is not the time to put a bunch of money into the market as we're looking at this reversal take place. And I ended up getting a buddy of mine out on this correction, right? So, everyone's a little skeptical as it happens, and you start getting these big red days, right? And then this big uh, red week or 2 weeks sat right here. This is what caught his attention, not me initially telling him. This is what caught his attention. Waited, got this correction, and he dumped half of his long position right here. And then, of course, now he's looking for that correct the new reversal signs or correction signs leading into a reversal, right? So how would we find that? So what we always look for is for these things to start dying out, we need to see this come back down, right? Our ADX is still going up right now. So we're still a little bit weary, right? If this comes back down below 30 and you start seeing this come back into like a cleared section here and start going back green, obviously look at our momentum signal here is still sharply down, but this is getting very low at this point. So seeing something start bouncing and giving us a correction or leading into consolidation, not reversal, that's when we start looking for a long play. Now, when we're looking at weekly timescales, that could last a month, right? Once you get a sign of a correction, you can hold that for a month. You can buy long positions and hold them because they're going to give you some kind of return. However, you still have to be very aware of where this market is headed, right? If it's not going to fully reverse, then you have to be cautious that any long positions you take could potentially fall out from under your feet. So we're keeping an eye on corrections being the best time to continue the trend, right? It's a little bit scary if you see it going green, green, green. You don't want to short it because you think it's going to keep going, but there's opportunity to catch a short, right? Rounding off at the top. So we got to watch out for that. So on the weekly, that's a very broad scale. Basically, the rule of thumb is whatever scale you're trading on, you confirm with one scale above it. So if I was going to trade on the daily, what I'd be looking for is, you see right now we've already done this sharp move, but we haven't really dove into this. So I'm actually not looking for too much more short in the short term before I see a pullback. And then we're going to see if we get rejection or if we break through it. So I'm very curious in the short term because we're not parabolic either. You see where this momentum is? We had already increased here and we increased here. And you see as we started fading out, that's where you got this green move, is as the momentum started fading, right? Then you get this pullback. Now we have lower lows with a lower ADX. So this is where divergence happens. Divergence is when things aren't lining up. So we have lower lows, but we don't have this higher indicator. So if you see here, look how tight this is, but we have lower lows, right? Then this one rolled big back down. So now we have to be aware that where this would have reversed, it didn't. So that's a sign of that continuation. But because we've already dropped so much, we're in this kind of weary state. So then we're going to watch these lower time frames, the 1 hour, the 4 hour, to kind of give us an idea of our position and whether we should go long or short or sit out. Sitting out is just as equally as important as being in a trade, right? And to me, right now on this hourly chart on the NASDAQ, we have extended our short right now. We're starting to fade. We're still creating lows, but our momentum is dying off. So at this point, I would be waiting to see what happens next. That's me personally. Trying to think if anything else right now is standing out. Again, the next day or so, you might still see lows. I don't think they're going to be as sharp as lows. You might get like one big sharp low and then an immediately pull back and then kind of bounce. My next phase in this is I actually like to see this double top on the 50 before I know what's going to happen. What does that look like? It means we're going to see some consolidation and it's going to work itself up just a little bit. It's going to meet the 50 somewhere, right? And it's going to get rejected. And then it's going to do this little thing and it's going to come back and it's going to meet the 50 again. And then it's going to get rejected. When it gets rejected that second time, it usually creates a lower low. And then you get a correction that leads into a temporary reversal. This is all, from just watching charts over and over and over. I could probably find it in here. It would look something similar to this, where you meet the 50 and it rejects. This time it only did it once though. So this one's a little bit different. And then you see how it made this lower low? And then all of a sudden you get this consolidation into a reversal. So this is something a pattern I look for. As long as I see this pattern and it's congruent with what I want to see on these indicators, then, I'll be more comfortable taking that position. But as of right now, none of it's happened, right? We're too beat down to just be comfortable taking shorts. We haven't entered consolidation yet. So without consolidation, there's no chance of a reversal. This is me just sitting out, waiting to see what's going to happen next. So if I got to sit out for 24 hours or whatnot and watch this hourly chart, that's what I'm going to do. I hope this has been super helpful for you guys. Please ask any questions, like, subscribe. I'm here to help walk you through this, especially with the market being beat down the way it is. I'm going to probably be posting a lot to kind of walk you guys through it. I wouldn't expect too much individual stock stuff. The reason being is they follow the indices, right? So the NASDAQ, the Dow, the S&P, and they're all moving pretty much the same. So if one's red, they're usually all going to be red. If one's green, they're usually all going to be green. And that correlates to the actual stocks. So there's no need to do a specific, right? Maybe you have a stock that is just doing like something crazy. Sure, if you comment below, I will do I'll do an analysis on it for you guys. But other than that, I'll probably just stick with the NASDAQ, as that's just the one I like to follow. And I hope that's super helpful. And like, subscribe, and I'll see you guys on the next one.